Good morning, traders. It is Friday, August the 9th. Taking a look at the charts, we got the SP 500 daily chart, and more or less the market's been moving just as we anticipated. We got into a topping formation. We got out of our longs. We ended up getting short as the momentum reversed direction. We made money on the fall, and yesterday, nice big follow through day with a big pop. And again, the big question here is this a more or less a short-term pivot high? It's obviously we got oversold. This is a knee-jerk reaction move back up, just like we saw before. The question is it a V-shaped recovery to new highs into August 19th turning point, or are we going to continue to fade back down, test these lows, maybe even start breaking down? If we were to break this low, really, if we go all the way across to this previous low way back over here as well, if we break this low, you could argue we are starting, this would be the early sign that we're starting a bear market. And all the signs are there that a bear market could happen at any point. So again, we need a technical breakdown for that to take place. Now overall, if we just take a quick look, we talked about this yesterday. I sent an update on it, talking about how the market had put in this W formation, or a double bottom formation. The height of the W is usually the power of the breakout. So this height here, from the top to the bottom, is usually where you can see the next breakout move distance-wise to the upside. You can see that pretty much happened yesterday. We also had the gap window, meaning a big price gap in price from where the market closed to where it opened the next session. And the market filled that gap with more or less this whole measured move as well, going up to the previous session's highs and more or less the W shape momentum. So we'll see how things play out here. Markets are turning down this morning, which makes a lot of sense, down about 0.5% after hitting filling gap window, hitting resistance. Now we're starting to pull back, and we'll see how things shake out over the next few days. But the market's been moving just as we are. We end up closing our SDS yesterday for the whole position ended up being about a 3.1% gain. I was hoping it would roll over before here in case there's lower prices, but maybe we can get back in. We'll see how the market goes. I don't chase the market. I let the trade setups kind of unfold. And again, it's not about a lot of trades. It's not about huge winners. It's just about slow, steady win after win, a bunch of first base hits. If you're shooting for big grand slams, that's how you lose a lot of money, when all your money's in one position and you're holding out for big gains. You have to trim profits and manage risk. So let's jump over to the rest of the markets here real quick. Not a lot has really changed over the last couple of days. We've anticipated this bounce. Now the question is, are we going to build a base and start to go higher and get potentially long again, or are we going to roll over and see the market sell off? So let's take a look over at gold and silver. Gold flagging sideways, nice momentum breakout move here from this big bull flag. Overall, it's holding above this 5-day moving average, which means if we're above that, we've got a high momentum move. This could very easily pop and continue to run higher. We are long gold with a 3 times leveraged ETF. We locked in 15% the other day on this big pop, and now we're holding the rest for continued gains with the trend. Looking over at silver, silver had a nice pop this week. It's been pulling back, consolidating. Again, huge vertical pops, parabolic moves on news, which is what really happened this week. Usually you see half or some of that move be given back within a couple days. Hopefully we'll get stability and we see this take off up above the 1750 in the next few sessions. Now we're not long silver, but we are long silver miners. And yesterday the best performing part of the precious metal sector were actually silver miners, outperforming gold, silver, and gold miners. So we're seeing a nice pop there. We'll see where they trade today. But overall, silver miners, we are long. We hit our first target yesterday for about a 6.5% gain on that. Now we end up getting in on this big drop over here based on the Fed, and we've played the oversold level to the quick first overbought territory. Now we hold the remainder for continuation trend move. Looking over at crude oil. Crude oil came down, ended up hitting our first target to the downside 51. If we go way back here, the next downside target is around 44.50, somewhere down in this area. If this breaks down, it could get real ugly and see a continuation move. But overall, it's made that move. It's having a technical bounce off of support. This is a really critical level. Not only was it a measured move from this pattern, giving us 100% Fibonacci measured move, but it's previous pivot low, a W formation. It's also a pivot low, consolidation, consolidation, consolidation. So very strong level, which is why we're getting a bounce. But there's a lot of selling going on in crude. If this starts to break down, it's going to get real ugly with some type of waterfall sell-off. And we could see very quick moves like we saw over here. The last time it broke down, it just 1, 2, 3, about 1 week, it completely collapsed. Huge. So that could happen again. Looking over at natural gas, down 2.6%. We're looking for it to continue to move down towards this $2 mark. If we go way back in time, it's going to go way back in time here. Actually, if I pull up the monthly chart, it's a little better. Here's the monthly chart of natural gas. And of course, it's come down and made a low. It's made a lower low. It bounced and made a lower low in 2016. Here we are in 2019, coming down to potentially make a lower low again. This is natural gas has been in a really big downtrend. More or less, it's just been a series of lower highs, lower lows, and we're continuing to let this play out. Hopefully, we'll get some type of parabolic sell-off. If we could see it completely collapse down into this 150 area, break this low, that would be a screaming opportunity. The $2 mark should be a pretty solid level for at least a strong technical bounce. But we're keeping our eyes peeled for a setup here. You can just see this monthly charts month after month after month. It's fading down. We are getting into seasonality where natural gas should start to firm up and become stronger. We'll see if we do get some type of bounce there going forward. Pretty much this time of the year, we do tend to see natural gas move up. We saw it move up in the last half of last year. The previous session, we saw it trade up, spiked higher. Over here, we saw it spike higher. The end of the year got pretty volatile, but it ended up more or less moving higher from the point we're at right now. And of course, it's done that over and over again in the past. So we're getting to a point here where it's oversold and we should get into a seasonality pop in natural gas. I really think that's about it. If we take a look at the US dollar index, US dollar, this is the monthly chart. You can see we're lofty up near these highs. We tagged this previous high. It's starting to pull back. In the grand scheme of things, if we go to the daily chart, you can see where we are. We've had a big consolidation. It broke out. Now it's pulled back. And the big question is, which way is this going to go? Is this a little bear flag and we see it break lower and kind of flush out? Or are we going to see this form a bottom and continue to go up and hit some new highs? We don't know yet, but we are already in positions with precious metals looking for the market to continue to move higher. And money continues to move into the safe havens, which is the dollar, gold, and bonds at this point. Anyways, that's all for now. Talk to you in a little bit. Bye-bye.